Good morning, good morning. Good morning everybody. How are you today? Was watching this really cool movie called Memento last night. And man, was it long. Let's take a look over here. So, the Gulag is online. Oh, it looks like pound yen is continuing its move bearish over here, below 146.60. This is something we identified yesterday, that if we break this area, there's a very high possibility for price to continue down, and looks like kind of ranged. And after this range, we're moving down in this pattern over here. So if you look left hand side, yeah, I think we should continue down. But the only problem is it's not moving with clean candles. It's just kind of like ranging a little bit, and then they're kind of like dropping down. So let's take a look here. So we have the Gulag coming in. This is the first week of the second term of, oh, gold is still ranging over here. All right, so let's do this. What we're gonna do is, let's bring up your JPY over here, and let's do a breakdown on pound yen here first. So looking on the 4-hour time frame, we broke below the support at 14700, and we're coming into this clean candle area moving down. But the only problem here is, if you look on the daily time frame, daily is also being rejected. Daily broke the low of the previous candle. It's coming down now. This is the thing, right? We're moving in Monday, and looking at the daily, we have clean candle to the left, so it should continue down towards 14200. But we need volume in the market right now. So if you look at the time, this is pre-New York session, and pre-New York doesn't really have much volume at this point. So looking at the 4-hour time frame, it still hasn't really completed yet. We still have about 2 hours left for this 4-hour candle to close. Looking at the 1 hour, basically what it did was it created a minor support right over here, because this candle went bearish, right? This candle went bullish, so we got a support formed. Next candle broke support, and now we're looking to see if we're going to get some sort of a rejection over here at this point, so that in probably by NY open we can continue down. So let's take a look at that scenario here. So looking on the 30-minute time frame, now we can clearly see there was a support formed. So if we want to look at it in more detail, is that this candle came down, we got rejection here, rejection here. This candle came down at the same point, we had a rejection here. We had another rejection, so we got a support formed, and then this candle broke support. So for price to continue down, we need some sort of another rejection at this point, so that we can confidently say, okay, you know what, now price can continue down. So let's take a look at the 15-minute time frame here. Looking at the 15-minute, yeah, we're still ranging at this point. So we're going to stick to the 30-minute, and then, yeah, I guess we're going to see if we can continue down or not, because obviously we're creating a support at this point here now. So we need some sort of a bearish candles on the 15-minute time frame to give us that confirmation. Okay, now price can continue moving down. Let's take a look at the small time frame here. Okay. Yeah, I guess we'll need this break below 143.80. See here. All right, let's take a look at this chart over here. This is GBP-CAD 15-minute, immediately closed half as price broke its own low in the 15-minute time frame, then stop loss hit. Okay, yeah, I guess there was this consolidation to the left hand side. I don't know, maybe the 30-minute would have given more confirmation, or maybe we could have waited for the 15-minute candle to close bullish here. But the idea was right. Candle closed bullish. This broke the high, so it didn't really work here. So this is where impulse entries are really risky. So whenever you're taking impulse entries, we just got to make sure that we're using a lower risk at impulse entries. All right. what is happening with today's market? Today's market is obviously ranging. We look at pound yen, we're ranging here. We can see that there was a lot of range here during the Asian session, no trade over here. We had a little breakdown with pre-London, we had a breakdown. This is the 15-minute time frame, and then we just start to range. We start to range, and I mean, we're still ranging at this point. So we're not sure what's going to happen here. Let's take a look at this chart. This is pound yen 30-minute chart. Entered in a sell as it broke the previous 30-minute structure. Closed 50% at entry point as the current candle broke current 15-minute candle. Closed 100% as the breaking is 30-minute. Okay, nice. So you took partial TPs here and final TP is down over here. Yeah, I guess we'll see if we're going to start moving by NY open or not. It's going to be really nice to see if we can break below at that point. Unfortunately, I have to leave to go to school to learn information that I'm never going to use in life instead of being here and learning value. Well, I can tell you this much, man. School is way more important than trading. I mean, never discount the knowledge, the education, the experience you're going to gain at school. That's really important. You know, like you go to school, you learn how to socialize, you learn how to deal with people, you learn how to communicate in groups. It's really, really, really important, especially if in your early 20s. Man, school is really important. What if trading doesn't work out for you? What are you going to do then? Are you going to work minimum wage or any random job you're going to get because you didn't go to school? Think about that. You know, trading is not for everybody. Not everyone's going to be profitable, you know, but everyone's going to try. So this is why we're here. We're here to make the percentage of people profitable a little bit higher, you know, only because of discipline. Let's take a look at this chart over here. This is breakout entry on the 30-minute. Yeah, I would have taken the same sell too for price to continue down. Close full position at -5 pips when price broke the second 15-minute high over there. Okay, yeah. You managed risk at that point. Yeah, I would have taken the same sell right over here for price to continue down. But I guess since price is ranging, we can't change. Okay, here's the thing, right? Whenever we come to the charts and we see that price is ranging, right? Every time when we see price is ranging on a chart and we take a trade, let's say our bias was sells, you know, and someone takes a sell and let's say you got stopped out in that sell. The best thing to do is to wait for another confirmation to take a sell. You know, what most times happens is that if price is ranging and we take a sell and we get stopped out, then we start looking for buys. You know, that's not the right thing to do because you always got to keep your bias the same unless you have overwhelming confirmations that the bias has changed. You know, so it's always important to keep the bias the same. If you're going to take a sell, take a sell. And if you get stopped out, that's fine. Just wait for a second opportunity to take a sell. You know, and if you don't get the opportunity to take a sell and price breaks out the other way, then that's a learning lesson right there. You know, then you got to wait and see that, okay, how you could have had a better analysis. Let's take a look at gold over here. Gold is obviously ranging. Looking at the daily time frame, oh wow, gold went all the way down towards 1817. That was in the Asian session. So let's remove these zones. So this is the 4-hour time frame. And if you look at it 4-hour time frame, we did tap down into a support. We created support. Looking at the 1-hour time frame, we're kind of like creating resistance in an area right over here. All right, let me just make this a little bit more better over here. Bring this down over here. Perfect. So this is where we're creating a resistance at in 1852. And I think if you look at this from a much technical perspective, what we can see is that obviously we're creating a resistance here. At the same time, we're creating a support down in 1845. So this is a range on gold, and this range is around, let's say like 68, 70 pips. But you can see how gold is ranging in this range, right? So we'll need to wait for price to kind of like break to one side. So if we look at the support area, we know that if price breaks below 1845, you have all these clean candles here to the left hand side for price to continue down into. And if you measure this range, it's like a nice 100 pip range over here. You know, so you have to wait. It's Monday, you know, first day of the week, so maybe the volume is low at this time. So it's very important just kind of like wait for price to break out of consolidation here. Looking at your JPY, it's pretty simple to say on your JPY that we broke below support and we're we made a low over here, and these are like money setups for me, usually when I trade these setups, because if you look at it, we created a low here after breaking support. So now if price is moving down, there's a very high probability price is going to continue down to retest this low. And if price is going to come down to retest that low, we need some sort of a rejection over here, or some sort of a resistance form. So this is a very good example here, right? So look at this. Price came down and it created a low at this point, right? Price went up, created a bearish candle. So when price created a bearish candle, I think some people took sells over there, anticipating price to continue down to retest this low, but look what happened. Candle closed bullish. So this is where you closed out your sell, but you kept your bias the same. You're not changing your bias at this point. You're keeping the bias the same, because even though your first attempt of sell didn't work, now you're going to have an opportunity to take another sell, but now you got to wait for price to kind of like create that rejection again for you to take a second sell, and there's a very high probability that second sell is going to work, because probably, price needs to retrace a little bit more before coming down. So we're going to be waiting to see what happens in that scenario there as well. So it looks like price is going to start heading down on pound yen here slowly. 5-minute candle is also about to close bearish in about 2 minutes. And I think if it closes bearish, just gotta wait for this to close. Either it closes bearish or it breaks its own low at 143.80. I think there's a higher probability price is then going to continue moving down. And we got a nice range over here, 17 to 20 pip range down at 140, let's say 200. All right, let's take a look at this chart over here. This is no impulse sells as big wig confirmation. Sells would be valid below the support area. Okay. Nice. So your stops are up there and you're looking for price to continue down. Yeah, I think that's a great idea. See, now it's breaking its own low. So now it has a higher probability to continue down, especially if this 5-minute candle is about to close in 1 minute here as well. So, even if you have like a 10 pip stop, you're anticipating price to drop here with volume. Let's see around like 142.50. Can we get to 142.50? We got 45 seconds for this candle to close. So if you're taking entries at this point, you're having stops above this candle right over here. And you're waiting for this candle to close at the same time. Because if this candle closes like a weak bearish candle, again, if it closes with a weak bearish candle, then the probability of it moving down is less. But if it's closing a strong candle like this, then there's a very high probability it's going to continue moving down, as long as it respects its own high up over here. So the reason we're looking at the 5-minute at this point is because, there's volume in the market slowly coming in. So that's why it's important to look at the confirmations right over here. How does JPY bank holiday affect GJ? It doesn't really affect GJ at all, because if it's a bank holiday in the yen at New York session, then in normal days, like the Japanese banks are closed anyway, right? So it doesn't really affect it. Let's take a look at this chart over here. This is the same scenario here for sells. Okay, it didn't really work. Things I had to improve on: put stop loss more pips above 30-minute candle, let it run if it's stop loss, not doing anything. No, it's pretty good. You managed the trade here well. Price broke the high of the previous candle to continue up, so you managed it well. So first attempt was there. I think if I was trading, this would be my second attempt right here for sells. But I'll be then looking at this 5-minute candle, and I'll also be looking at this 15-minute candle to see that if it closes bullish, then obviously there's going to be a very tough time for price to continue down. So let's say it's going to look something like this, right? Yeah. So you're entering at that point, your stops are above the 15-minute candle, and you're anticipating price to continue down to 142.50. So profitability wise, it's perfect. But if you're looking at it from a risk management perspective, your entire risk management is going to go towards, if let's say this 15-minute candle closes bullish, that's where you're managing your risk at that point too. Looks like your JPY is also trying to reject the 126,700 area. Are you trading today? No. Right. Let's take a look at this chart over here. This is your JPY 15-minute entry when we broke the low of the previous bearish candle. Price came up. You cut percentage. Okay, so now we can give this trade a second chance too if it's trying to continue down on your JPY. Yeah, I think the big thing is that now when people are taking losses, you're really managing your risk at that time. So that's actually very impressive. You know, more and more traders are managing their risk while in drawdown. So that's making you lose less than you anticipated to lose. Ooh, look at that. Look at that. Trying to continue down over here. All right. Let's take a look at this chart over here. This is GJ. So what's this? Sells over here. Secured 8 pips by closing 80%. 20% of runners hit stop loss at entry. Very nice. Very nice analysis. So now I think theoretically we should be continuing bearish here. But obviously we're looking at candles to close against us so we can manage risk at that point. So still waiting here. Oh, what's this? Someone took a swing trade. This is a 1 hour chart. Resistance formed over here when price closed bearish. You took a sell at this point. London open candle showed strong volume. Nice. So you basically held it. I don't think the swing was risky. I think the only thing you should also point out was that how you kind of like trailed your stops as price started to continue down. But I guess now we're going to get that continuation over here. How much is this? Like four pips up over here. So 388. I think 288 would be a pretty good idea here. Like 10, 11 pips, 12 pips. Around 140, 250. Should continue down till that point.
Are you back to trading, coach? Good morning.
Good morning. No, not yet.
Not yet.
Not yet. I'm waiting for our platform to go online here. Should be this week. Should be this week. Gonna do some testing, then probably by next week we're gonna be back. What's the difference in volume on GJ from 3 to 6 as opposed to 6:30 to 9:30? You know what I've seen? I've seen from 3 to 6 basically someone's talking about London Open till pre-New York. I've seen during London session, I think it's more volatile. You know, it moves quicker during the London session, and then we moved into New York session. It kind of like calms down a little bit, so it's easier to tackle at that point. But in London session, sometimes it moves without confirmations and it's just big giant candles there. So that's a big difference there. Big difference in volume and volatility. Let's take a look at this GPAUD idea over here. Sells below this support. You have support over here. You have clean candles down here. Maybe these wicks are some sort of rejections. You might want to take a look at that on a 15-minute time frame. You have clean buys above this area here as well, but left is not that clean. I think buying is way cleaner than selling because of these rejections down here. But zones are good, ideas are good. So let's see if price comes up there to break up or it comes down here to break down. Gold is also trying to break down over here now.
Yeah, I've been watching gold since last night. So you might find that 1826 is a key level. The issue that I have right now is we rejected that area pretty hard. So I'd wait a bit to see how we're moving on the higher time frames and see if that's a legitimate drop. This area over here from 1844 to 1826 is a very interesting area. So I think if people are watching that and looking to take sells in this area here, I think you have a good opportunity from that area. From, I guess, once we have a clean break from 1845, and what you'll be looking for essentially is, you know, this sort of area over here. So we should be able to get from this area here to at least 1836, tapping into this area here and into this area over here. We did have this massive drop last night down into this level here. So I think there's a good possibility that we do return to that during the North American session as we gain a little bit of strength. I had taken sells last night from 1849 to 1838, and then I had a runner at 1844, which stopped out at 1840. So good start to the year. Those are my first two trades for this year, but that was just because of the fact that we had the higher time frame volatility, and we basically were continuing off the North American session from Friday. So for people wondering why I was specifically looking last night at a trade for the Asian session, knowing that we had a massive move for the North American session on Friday because of NFP, the Asian session didn't have opportunity to absorb that information yet. So they absorbed it last night, and that's where we had that drop again. So you'll see that it should probably continue.
All right, let's take a look at this chart here. This is the first chart sent. Let's take a look at this idea here. This is 30-minute chart, close 50% when price moved back into the range. I don't think that was a good idea to close 50%. I think you needed some sort of a candle to close bullish for you to close 50%. Not when price is going back in the range, but that was still pretty good. I mean, you're being risk averse at that point. You know, I really agree for price to continue down. Yesterday when we were looking at gold, we were looking at how price is gonna, like, you know, weekly may wick up here for probably Monday and then come down to fill this wick. But man, that drop happened right at Asian session. It was pretty wild when I saw that. I was like, yeah, there goes my analysis.
Yeah, I had an alert set up for those areas, and then it just started to go, and I was like, all right, I guess we're in now. And it made sense because, like I said, I was expecting a carryover, and to your point, I was expecting the weekly candle to continue bearish from last week. I just didn't expect it to happen that quickly.
Yeah. All right, looks like we're having some sort of an issue over here. Candles are coming up, retracing. Let's look at the 5 minutes. This candle is about to close in 4 minutes. So now we want this 15-minute candle to continue closing bearish for the next one to continue down. Hey Raja, this is my GJ trade right now. Can you tell me what you think about my entry? Let's take a look here. I think it's pretty good entry. Closed 50% as it came back to a range, and candles closed bearish for sells. I think it's pretty good. You're still in the trade, so still be running pretty nice at this point. So this is the thing. If if we have entries over here, and if candle is coming up, so if we look on the smaller time frame, and if we see that it's breaking the highs over here, this is where you're cutting your 50% positions right there. You know, you're taking 50% off and you're letting the rest run. And if the 15-minute candle closes bullish, then obviously then you're deciding whether you're going to keep your position running, or are you going to lower the risk, or are you going to close the position out. So those are decisions you need to make around your entries, you know, or when you're taking trades. So still candle hasn't closed. It's still open yet at this point. So I think closing the entire position while the candle's open is not a really smart thing to do. You know, you got to let the thing still run and breathe. Because I know sometimes, you know, when price goes against them, some people, you know, they close out the whole thing, and later on they see price moved in their way, and then they're like, oh man, I knew it's gonna go my way, man. I still closed the whole thing. So you don't have to do that.
Oh man.
Hey, how are you, Mac?
Hey. 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 Cough. What's up, bro? You slept over?
Yeah, very good, very good. Was watching Memento last night.
Momentum?
Yeah, Memento.
Memento.
Price closed below support. Oh, it looks like everyone got the same sells here on GJ. You know, price breaking below support and taking sells. Every chart I'm looking at is kind of like the same chart over there. I often have difficulty having confidence in my trades because I'm eager to manage my risk. How do you think I can improve my trading confidence? I think the best way to increase trading confidence, and we've talked about this before, is to, like, you know, when you're in a trade and you're looking for price to continue down or continue up, and you're getting afraid at that point, or you're, like, you know, not having much confidence, just let a small position run. You know, because confidence comes from letting the entire position run. But if like, you know, you're losing confidence, then it's always best to leave a small position run. You know, maybe take a 0.01 cent trade, or maybe cut your trading size by 50% or 60% and let that run. Because the more you let smaller positions run, you know, the more you see smaller profits in that, the more confident you're going to get in those setups the next time when it happens. So it's very important that way. You know, as you keep trading along, you just let like small positions run and increase confidence slowly. Managing the trade on the 5-minute. Do you mean closing a percentage if the candle breaks previous highs on the GJ trade? Yeah, I would do that. I mean, if I was in this trade, I would have closed 50% by now. You know, and I would have had the rest 50% running. So now this candle is about to close. This is also the close of the 30-minute candle. So we look at the 30-minute. 30-minute is still bearish. We still have a high up there, but if this 15-minute candle closes bullish, then that 30-minute is sort of like a rejection. You know, so we're going to see how it closes. It's about to close in 15 seconds over here. Price went in profits for about 4 pips, and now it came back in drawdown. Gold is also about to close below 1845. Let's take a look at GJ. See this 15-minute candle close? Let's take a look at the 5-minute candle here. Okay, perfect. So now I guess we don't want price to come above this area. If it comes above 142.60, or if it breaks the high on the 15-minute time frame, then the probability of it coming down, it kind of like decreases a little bit. You know, so it becomes a very extremely delicate situation at that point. How to control overtrading. This is the only issue which messes up my risk management and eat my profits. The best way to control overtrading is to focus on 1 or 2 trades a day. If you cannot focus on 1 or 2 trades a day, you really gotta, I mean, there's no other way. There's literally no other way to stop overtrading. I mean, I could say, I mean, actually, you know what? No, I'm not going to say. But it's very important. Just stick to 1 or 2 trades a day. You know, that's the best way. It's pretty hard, but you got to do it. Let's take this lost. This was a lost on the London session. So you took a sell early morning London session and take this trade in the 15-minute time frame. I lost less than I planned to lose. In your opinion, this is a good entry? I don't think this was a good entry because your support was right here and you took a sell before price broke support. So I think you had to kind of like wait for price to break support over here. All right. So now, so if you look at this, right over here, our risk reward is almost like 1 point. What's the risk reward over here? 1.2 to 1, or 1.3 to 1. But if you bring a stop loss down over here above the highs of the 15-minute time frame, now our risk reward becomes even better. So risk reward is subjective because at first it was bigger, now it's even tighter now, now it's better. Now we have a better risk reward. So now our risk reward is 3 to 1. No, risk reward is 1 to 3. Yeah. He put stop loss wrong. No, I think it's pretty good over here. Someone in the gulag said, "Hey, he put the wrong stop loss."
Hey, somebody saying that you didn't post the link on Slack for Zoom, so I'm just making sure. But there's 400 people in the Zoom, so I think you did.
Yeah, I did.
This guy's trying to scam me.
No, I did. All right, let's take a look at this chart over here. Lendarius, where does Lundo go next? The Lundo made a high at the Lundo. Paper trade when I saw price moving down. Yeah, I think it's good, man. It's moving down over here. I wasn't confident, so I decided to anticipate price to see how it would play out. This is an example. If it's taken more often. Oh, very nice. Yeah. Theoretically, it should continue moving bearish. So we're still waiting here to see if it's going to continue down here or not. Looking at gold, gold is still respecting this low over here at 1844.22. I think it needs to break below these lows for price to continue down. Looking at your JPY decided to retrace a little bit higher over here. So if someone's looking for sells on your JPY, you're still waiting over here because we got a low formed here. Price is moving up to this breakout area, so we got to see if we're gonna try to create resistance here or not. Don't like the reaction with the support, so I closed my trade in a small profit. It's Monday. Take it easy. You know what, Yasir Mir? That's excellent right over there. Because you saw that price wasn't really moving a lot, so you decided that even though price moved later on, you've decided to say, hey, you know what? It's a Monday, so I'm probably gonna take it easy at this time. Most people. All right, let me just try to mute here everybody who's not muted. So. Guys, if you have mic problems and you are unmuted, please mute yourself because it's pretty annoying hearing these problems in my ear. All right, let's take a look at this chart here. MAC entered at the retest 144.60. Oh, nice entry. 144.60. Price came down. Very nice entry over there.
Yeah, I already closed half of it.
Oh, nice. All right, gold is now turning around over here. Gold's turning around. We're also moving into a high volume time here slowly, NY open. And as it starts to break the low, I suspect it should continue moving bearish at least till first 1840 and then continue on towards 1834. What is better? Oh, it's this question over here. What is better, waiting for the 5, 15 or 30 minute candle to close partials in a loss or closing partials in retracement? Or does it depend on if it breaks the high on the small time frame? That's totally up to you. As you start seeing price move and as you start seeing price retrace, you're gonna figure out where your comfort level is. Is your comfort level closing, when it breaks the high on the 15-minute time frame, or if it breaks the high on the 5-minute time frame? There's nothing set in stone what's better. It all depends on where your comfort level is, where you like closing partial positions. It's all based on that. And that takes a very long time for you to understand. For me, it took almost like a year to see that, okay, where my comfort level was when closing partial positions. You know, an idea is an idea, but when you execute on that idea, it's a whole nother story. Because, you know, sometimes, you know, like guys get antsy and they want to close positions if price is breaking the 5-minute highs. You know, when price is breaking the 5-minute highs, you need to understand that that's a lower confirmation time frame. So you're waiting for price to break the highs sometimes on a 15-minute time frame, sometimes you're waiting on a 30-minute time frame. So you got to see how many times it's breaking the 5-minute and continuing against you, and how many times it's breaking the 5-minute and still going in your favor. You know, so that's something you'll have to look for yourself and see like where your own comfort level is, because we can give you the idea, but executing on those ideas is something you need to see it happen multiple times for you to be confident about it. So we can see right over here, this 15-minute candle is breaking the high of the previous 15-minute candle. So I'm guessing some people broke the closed 50% right here when this candle closed bullish. And now this is where your entire position is getting stopped out. So instead of losing, like let's say if you had a one lot open at this point, you lost way less than what you planned to lose at that point. So if I was in this trade, I would have lost like a tiny portion of what I started to risk. Let's say if my risk was $100, I may have lost maybe $40 in this trade.
Yeah, if you're looking at gold, if you go over to the hourly, Raja, I think if people are watching gold, you will find that we have potentially a clean move into this zone right over here. So what you'll find is if we do break down, because we're entering this hourly zone, we're going to move through this area here, which is this area here, and which is this area here, and we should top out at the bottom of this candle here, or the bottom of this zone right over here. So you might have a nice trade from 1844, 1845 to 1840. Now people are asking, where are you putting your stop loss? Your stop loss is probably going to have to go above this area over here. So you have this being your risk, 1849 to like 1845, and then 1845 down to 1840 as your reward. Now the idea behind that is your risk up here technically shouldn't get hit. We should be clean to, you know, avoid this area here altogether. You might find the next hour pushes up a bit and then drives down. But if we are dropping, this is more of a safety for your stop, and then essentially we're going to continue, and you'll probably be able to manage your trade down into this zone over here. So we might get into 1838s, 1837s, and then eventually back down to this area over here in the 1828s. Zone over here. So we
Good morning, everyone.
Hey, David.
Oh, feedback.
Took an entry on GJ earlier on, still holding. Oh, nice. You have an entry there, you're still holding at this point. Waited for 3 hours and took an entry on the retest. Target is 142.70. Yeah, I think it's good. Like if you're holding up over there, I think it should still continue down. Looks like we did a deeper retest here at that point.
Yeah, I'm looking at the 30-minute and it's still not breaking the high of the previous one. So it should be good to continue down.
Yeah, we're just creating the support over here. This is the perfect example of no volume here at all. Very, very low volume here. This is why you're seeing this choppy price action. Extremely choppy. Let's take a look at this chart over here. This is pound yen. Man, everyone is trading pound yen. Took a trade with sell limit, lowering stop loss to 9 pips instead of 15. Secured 80% at 1-to-1. White line. Nice. Beautiful. Let's take a look at this chart over here. Pound yen, price coming down. Quick question, what do you think about these ideas? So price come down, so you're looking for buys. If price comes down and creates a high over here, you're taking buy. Yeah, it looks good. And then for a retest as well, looks good. Ideas look good. So I guess we'll just have to wait for that to happen at that point. I think there is a boom is about to happen. Okay.
Boom.
Yeah, let's just
It just happened. Boom.
let's just wait and see what boom are we waiting for.
Hey, quick question. Have you used the skateboard or no? The board?
No, I haven't.
You know what I was thinking? Like first thing in the morning, that's the last thing you want to do. So, probably midday will be a better time to use it.
Yeah, probably. I'm trying to see where I put it. It's not here. But yeah, haven't really turned around and started to use it at all.
You gotta grow big cows.
Let's take a look at this chart over here. This is Euro AUD. Haven't seen this in a while. Waiting for bearish close and resistance to be made. Either where prices are at the next resistance here for price to continue down. Also looking for momentum to come into the market to fill the 1 hour wick. Moving down. Yeah, that looks good. So you're waiting for some sort of a resistance to form. The idea is good because we made a low coming up. If resistance formed, then there's a high probability we can continue down. Also try to see what would make price move up as well. Hey, I'm trying to use magic keys and I'm getting the audio cues for clicks, but nothing is happening when it's on my charts. Yeah, there's a troubleshooting guide that comes with it, so you might want to read that.
Okay, there's been about 20 people that have asked about the fact that the Japanese have a holiday. Japanese are always on holiday when we're in the North American session. It's 7:45 in Japan right now. It's always holidays. It's irrelevant to any time Japan has a holiday. It's irrelevant of anything today. Their time, it's always closed. So we don't care. We care during the Asian session if Japan has a holiday. Same thing as if you care North American session. If there was a holiday today in the US, then we would care. You can't care about holidays that are not valid in the session. Please stop saying that. It's just, it really shows the lack of logical thinking that you do have, and this is going to affect the rest of your trading. If it's raining in California right now, I don't care that it's raining in California if I'm in another city. It's irrelevant. If I'm going to California, then I care. But if I'm not going to California, California can do anything it wants. It's the same thing with the Asia session. If we're not in the Asian session, it's irrelevant that the Asian session has a holiday.
But normally it's not a holiday, but it's a holiday now.
Yeah.
And then you're like, well, buddy, listen, it's the banks are closed at that point anyway,
Yeah.
Yeah, Japanese people have a lot of holidays. Like a lot.
Well, soon China's gonna have a month-long holiday here too.
Yeah.
Hey, love from Kenya. I'm a new trader. I moved my first ever live account from a deposit of $5 to $9 on Friday. Trading GJ using your analysis here. Perfect entry. NW for gold and GJ NW. Oh, I don't know what that means. All right, so we got the 15-minute candle close over here. So this really nullified the sells over here at this point. So I guess whoever took that trade and you followed the trade management here, I'm pretty sure you lost way less than anticipated. And I think this is the point where you can say, okay, like, you know what, I'm just not gonna mess around for Monday here anymore. Gold is still stuck in this scenario here, deciding what to do. Slowly trying to break the lows over here.
Out.
Good morning.
Yeah. Morning, bro.
Morning, man.
You got the sniffles? You got allergies?
Yeah, kind of. I hope it's allergy, not corona. No, the thing. Sorry.
The thing.
Hey Roger, I was thinking of trying FTMO and now I saw your stuff for funding accounts. What do you think is better? I think what's better is to find consistency in your own account and then take that consistency to a funding account. Because if you don't find consistency in your own account, you can't get consistency in the funding account. That's just how it is. So you're going to continue. Man, I know this guy who spent $2,400 on funded account on the $100,000 demo accounts to see if he can get that funding account to make money. $2,400. And I said, well, why didn't you take a small portion of that and invest in some sort of education? He's like, yeah, but that would have taken me a long time. And then he says, oh, is there a way you can help me in any way? I'm like, and I just stopped responding to him, and then I blocked him eventually because he wanted to pay me to trade his FTMO account and split the profits. And I'm like, so you want me to split the profits with you when you're going to be splitting the profits with FTMO as well? I'm like, no. The guts on the guy. I don't know. These are all like unrealistic expectations, people have.
Just managing a $100,000 account it's incredible. If you've never traded before.
Yeah.
Like,
yeah.
What's gonna be your first lot size?
Let's see here. Do you know some good high leverage brokers with small deposit? I mean, legit brokers. No legit regulated broker is going to have a huge leverage with a minimum deposit. So let's just put that out there. What leverage you use when you trade 1 to 2 times a day? I'm using a 500 to 1 leverage mostly. All right, let's take a look at this GU chart over here. GU. Oh, price came down, created support. I'm looking to take a sell after the zone will be broke and the 15-30 minute candle will close below it. Okay. I think the other thing you can look for is as well, if price is coming down, if it's coming up, maybe it's going to form some sort of a retracement for price to continue down, or like a resistance for it to continue down to retest this low. But I don't like the environment here. It's just so rangy. I mean, if you look at the 15-minute time frame, we're entering that range there again. I mean, it's just, wow, garbage. Look at this. Just not clean at all.
Hopefully at New York Open, price can get a little push and reverse completely.
Yeah.
You're in the gold trade, you should be deeper in profits right now.
Yeah.
As we broke through. So your first stop is essentially just below, like I said, this zone over here. So we're breaking below this area here, and we should fill this area. So this candle here should fill to this point right over here. So we should continue down. I'm just watching these zones right here. So 1, 2, and 3. So I'm watching those zones there, but this would be where you put your stop now. So we've adjusted our stop and we should be able to move further down. And if you want, as soon as this candle closes on the smaller time frame, your stop loss can go there now at that point, and then you're in profits. So you're just waiting for the 5-minute candles to continue to break down. This first 5-minute candle just broke out of the consolidation that it was in, and now we should have another break for the next 5-minute candle.
I have 1842 as a level. It's just being tested. Yeah, go ahead, Carol.
No, I was about to ask Ted if he was looking for sales below 1843.
Yes, I want to go to 1828.
Yeah.
Okay, 1835 is my target. I mean,
Yeah.
the easiest target.
Yeah, the first target I want to finish is I want to fill the hourly candle. So where we are on the 30-minute, essentially I want to get to this level here. That's sort of my first goal, is get to this area here and then just follow these 30-minute candles down into this zone over here. But now my stop is at above break even, so I'm okay. I can let it do whatever it wants to do. because it might pull back a bit before the North American session open. So I'm okay at this point. My entry was at 1845. So we're at 1843. So about 20 pips in. Just watching how the 5-minute candles are forming. But if anyone took a trade with gold, you should, and this is your first trade of the day, you should probably secure 10 pips and just call it a day. If you've traded gold already once, like I have, I'm looking to see if I can extend my trade and take another position to go further down into the market. So I'm not worried about profit on this trade. If this was my first trade of the day, I would have closed on that 5-minute candle and taken 30 pip profit. So that, like I said, a good trade with gold can be anywhere from 10 to 30 pips, and that could take maybe a minute candle, a 5-minute candle. You should always be securing profits with gold. You shouldn't allow your trade with gold at this point to go into negatives. If you do, you're stupid. That's the bottom line. There's no other way to say it.
No cap.
It's, if you take a 30-minute trade at gold, or 30 pip trade at gold, and you haven't taken one trade yet today, that should be your profit for the day, and you should just walk away from the computer.
All right, what's this? Quick question about US30. What drives that fundamentally? It doesn't make sense to me that the markets should be this high since most things are not back to normal. Yeah, but you also have to think about this, right? There's a lot of stimulus being pumped into the economy, so that's driving price up artificially. And that's also driving gold down too, because of the stimulus, which means that when they're giving money away, you have vaccine optimism. So that's driving gold down. That's driving artificially propping US30 up too, because that depends on the stock market. But I don't know much about US30, but I think that's the reason why it's still bullish.
Yeah, and you also have people, because the US elections are officially over and they have a president, that's brought some stability back into the US dollar. Once Biden starts talking about what he wants to do with the economy, that's where we'll get another move with the US dollar. We'll start to get like a real move with the US dollar for the year when he starts introducing sort of what he wants to do with the economy. So I think if people are trading US dollar, just be aware of sort of what Biden is going to do for the US economy, and then based on that, you'll see either a strengthening or a continued weakness of the US dollar.
Kamala.
Yes.
Ooh, that was a 22 pip move over here in gold.
Yeah, and it's still moving down. I think we should finish off at the bottom of this 30-minute candle, I think in the next couple of minutes. So if people are trading, the key thing is it's this zone over here that we're entering. So this trade may just it jumps into that zone and then pulls back before the 8 a.m. hour. I think you have a decent trade. You may want to look to close when we get to that point. If in the next 5 minutes this candle dumps over to here, then I would be moving my stop loss to here and then letting it just hang out, which it's doing right now. So right now you should be in like 30 pip, 40 pip profit. So we should probably look to close in the next couple minutes. Or move a stop loss, either one. So my stop loss now is like 7 pips in profit. So I'm okay. I'm comfortable with taking that as a win. I'll keep moving it down slowly based on the 5-minute candle. So you can see the 5-minute candle right now. If you took a trade based on the previous 5-minute candle, you can see your stop loss from starting from here. Your stop loss could probably be right here at this point. Watching this 5-minute candle hopefully doesn't retrace too much, and then the next 5-minute candle may pull all the way further down. But if you were watching gold, this was your trade right here, these two 5-minute candles, because we were able to break. That's basically a 40 pip move in 10 minutes, which makes sense because we're at the end of the hour for gold, and it just had a dump. Now this 5-minute candle, you see is sort of pulling back a bit to start the new 1 hour candle. So you'll get that continuation over here to drop if that is indeed what we're going to do as we continue through. So this 5 minute candle here, people would be like, oh no, gold's going up. It's like, well, no, this is now correlating with the last 5 minutes of the hourly candle to give you this sort of this sort of style, and then the next 5 minute candle could potentially fill that wick on the new, or sorry, the next hourly candle could have a wick fill at that point. But either way, you should have secured profits, and you should have had a nice trade at this point. I think it was very easy.
Yeah, I mean, most times when you're looking at high volatile pairs, they will give you opportunities to close like 15 pips, 20 pips. You know, at the end of the day, it just comes down to you. Like, I mean, there was this one guy, he sent me a chart late Friday afternoon. They were in gold buys and he was up like 50 pips. And I'm like, and he's like, well, do you think after the weekend it's going to continue moving bullish? And I'm like, okay, what's your target on your 1 cent lot? He's like, well, I want to make around $50. You know, I'm like, okay. It's not about you making $50. It's about where do you think is okay for you to just secure position before the market close.
Right.
And he's like, no, I believe it's going to move up. And we can see when market open just dump down. So it all comes down to, okay, when are you more like, you know, securing positions? Because as long as you keep securing positions, you're not going to go in drawdowns. I mean, that's how it is.
Yeah, and especially with gold, there's two ways to approach gold. Is, you know, you could take two positions. So you could take two penny lot positions, and you can say to yourself, okay, I'm going to allow both these. I'm going to allow one to close at 10 or 15 pips profit, and then I'm going to try and have one run down a little bit deeper. Like I said here, if you took trades at 1845. We dumped right into 1841, 1840. That's 50 pips. That's a huge move for a pair to trade, and it's in 2 5-minute candles. So I think, you know, a lot of people have to get used to the fact that if you're going to trade a high volatility pair, your trade may only last a few minutes. You're not going to have a trade that lasts 2 hours. You may have a trade that lasts a few minutes, and you get 30 to 50 pips, and you know that will be your daily trade. Get used to that. And it sucks because you're like, later on in the day it drops another 100 pips, or you know, it'll drop 60 pips. Like, that's not what you can't do the hindsight thing where you're like, oh, I wish I would have held. It's like, if you wanted to hold, then you would adjust your stop loss to hold. If you don't want to hold like I am right now, and I'm like, my stop loss is in profits, I don't care what happens, because I've gotten to a profit point on my trade at this time that I'm comfortable with. Like right now, I think my stop loss right now, let me see right here, it is 11 pips in profit. I'm happy taking that 11 pips, so I can either have it go further down and then move my stop loss, or if it moves back up, I'm comfortable taking the 11 pip win. Like, you have to understand that, and you have to decide that before the trade starts, what are my optimal targets, and then as the trade is progressing, what am I comfortable with?
Yeah, that's true. You will get another drop on gold. Where it's looking right now, it's gonna retest the previous low. And chances are we're gonna break that low. We're gonna continue to the shadow area that Raja has marked, 1845.
Yeah, agreed.
Yeah. There you go. Okay, secure profits.
Yeah, that was your second move,
Yeah,
with gold, to fill that hourly wick, and if we do continue down,
secure.
it would move it, but it's very early. Wait for this
Well,
candle to actually form.
That trade lasts like 15 seconds, 20 pips.
Yeah.
Now what's easy? I mean, it's easy trade.
Yeah.
Now chances are we're gonna reject that area, and then this hourly is gonna make a new high.
Yeah.
And that's it. No, there's more room to the downside. Come on, Gold, come on.
I missed that, Kerwin. Come on.
Yeah, if you're watching now, Gold, I would watch the 5-minute time frame. We need a clean break. Once we get a clean break of this 5-minute level, then we should be okay. So similar to what we had here, we had this, then we dropped, and then now we're in this area over here. We just need a clean break, and that will drive us to this area here on the smaller time frames. It's just the 5-minute candles move so fast. That's where you could sort of watch these 5-minute candles and take advantage of that, because they do move quickly. The 15-minute candle may, be too late. Like right now, it's like we're down to 1840. So you might find that you want to close a position here. If you're trading it, you're like 40 pips deep, 30 pips deep. You just want to get out of the trade. But if this 5-minute candle breaks further down, into 1839, 1838, you'll have a really nice trade. It's just, if it's where your comfort level is. And I think anyone trading gold right now should be happy with their profits.
Yes, sir. With gold right now, basically, you just need for the price to stay below 1843. If we start breaking above 1843, then it's gonna retest the high of the previous hourly candle. But the way it's moving right now, it's looking Gucci.
If there's no official Forex bell to start trading NY Stock Exchange, do banks start trading before 8 a.m. in New York? There's always a bell that starts trading. So we can't talk about how if there's no bell. Any insight on why GJ trade didn't work out? Nope, nothing. No insight on why it didn't work out. Because if you look, there were overwhelming confirmations we should continue down, and the only thing that kind of like made that trade not work out was the 15-minute candle closing bullish, and that's it. It is what it is. So it gave you confirmations to maybe close positions, manage risk at that point.
Holy moly.
Holy moly.
If people are patient though, I mean, we're creating that resistance now at previous support for GJ.
Yeah, I agree with that. And the 30-minute, if we don't break above the previous high, I think we should continue down.
I mean, we're gonna create resistance, and we're gonna be able to ride the 830 candle.
Right here, look, this high. Oh.
Yeah, if you're trading gold, your stop loss should be below now the 30-minute candle. So this 5-minute candle should be your profit. Expect to close right about over here. If you're going further down, now you can place your stop loss here if you want. Some people may want to close. We're 60 pips deep. We should be good.
Beautiful.
Yeah, we're gonna now 70 pips deep. So.
Nice. Ted made that loss back we got from GJ and more, way more.
There you go. But 80 pips, 90 pips, 100 pips.
Holy moly!
Oh, very nice.
Good call.
Well done. Yeah, that was a very, very, very good call.
Well, we won.
Oh man, I mean
you,
that trade from
Trade
last
closed.
night, Ted.
Yep.
Very nice. That's awesome. That trade from last night gave you a nice margin.
Well, yeah, because once I had that trade today, you can just do. I knew that we would probably repeat that same idea. So I mean, this basically we had. So I just closed 76 pips in profit. So that's basically opening position at 7:30, closing position at 8:05. So that was a 35-minute trade, 76 pips. But you can see based on the 5-minute candles, the breakdown, we came right to the level where Raja said. Now, here's the thing. It can go further, but I don't care now. I got what I wanted, and I got to the target that we were expecting. What I said was I was looking for these moves right here, these candles here to finish, and then eventually get to this area over here, and we are in that area there. This is my idea. I'm fine with it. If it continues to drop to 1800, I don't care at this point. I'm not worried. I'm looking for the easiest trade for my psyche and something that I'm confident that we're going to do. And now that we've done it, that's it. Like, I'm done for the day.
Yeah.
So you have to get used to that. You have to get used to saying, this is my plan. I execute my plan, and now I leave. If gold continues to drop, I'm happy for anybody that's in the trade, but it doesn't bother me. It doesn't impact my ability because I wanted a specific target and I got it. You have to get used to that, because as you continue to trade over the years, this is where your confidence comes from, where you're able to call targets, and you can keep doing that day in and day out. So you don't have to worry about trying to hold trades longer. You don't have to worry about, I hope gold drops to this level. I hope gold drops here. It's like, no, you get exactly where you need to go.
Yeah, that was a very, very nice move. Clean candles to the left-hand side. Man, you guys broke it down pretty nice.
And then there's people on social media that will talk about that this live stream only gets 10 pips, 15 pips. No, this live stream, we kill it, but we always want you to secure 10 or 15 pips so that you don't have a loss. So anybody talking otherwise it's just stupid. We're always looking to get the most out of a trade, but we're also looking to always secure profits so you don't take a loss. At the end of the week, I rather see small blue wins than red losses and then one big blue win. Because as you can see here, we started off looking for 10 or 15 pips. We got 70 pips, and we didn't do anything different than we would have done any other day. It's the exact same thing. It's just the market allowed us to gain a little bit more in the trade this time. We listened to the market, and that's why we continued what we did.
Also, the fact that we don't trade a small volume. We trade a high volume and a lot of volume. Basically, there's no way we can hold 20, 30 pips and drop down. Basically.
Well, it's not even that. It just doesn't make any sense. I've never understood why people would want to hold 30, 40, 50 pip drawdowns when you could work on an entry, like I said, on the smaller time frames here. Raja had it marked out exactly this way and hit your target here. I mean, 1845 to 1837, that's 70 pips. I mean, and you're doing that in a single move. So you did 70 pips today. You do maybe 10 pips tomorrow, you do 20 pips the next day. You've done a pretty good volume and you haven't sweat. There's been no sweat. You had basically no drawdown here. Tomorrow we'll see what happens. Wednesday we'll see what happens. But you get out of the trade and you can see here we pull back 30 pips. I don't care what happens. Doesn't matter. We got to the target that we wanted and we're out of the trade. It's the best feeling in the world watching the market do stupidity while you're out of the trade.
Rakeel, can you go on GJ real quick on the 30-minute?
I think Rakeel's away from his desk.
Ted, quick question.
Yeah.
Ted, did you skew partials or did you just move your stop loss and profits along the way?
I just moved my stop loss and profits. I don't secure partials. I had 11. My position here was 11 pips in profit secured, and then as soon as we had this target here, when we hit it, I closed at that point. So I closed at 1837.70 at that point. But I'm not closing partials because of the fact that last night I had already did a 100 pip trade with gold, so I wasn't too concerned about my trade today. If we didn't hit this target here today, over here, I wouldn't have been too concerned because I had 11 pips secured up over here. So if it happened to pull all the way back to go up, so today, like this morning in the North American session, I make 11 pips and call it a day. But I'd already secured 100 pips last night. So my mentality is different. If this was my first trade of the day, I'd be looking to secure as much as I could. And, I would probably have moved my stop loss 30 pips in profit or 40 pips in profit. Because I've already already been profitable today. I'm just looking to see if I can take a trade and squeeze a bit more out of the market. I'm not looking to have a little bit extra at that point, right? And this was a lot extra, so to speak.
Yeah, definitely.
Right. But the thing is, that's how my mentality changes. My mentality shifts. If it's my first trade, I don't want to take a loss. So I'm always looking to, try and secure, but I'm also looking to get like the optimal idea for like a specific time frame, whether it's a 30-minute time frame or 15-minute time frame, so to speak.
And if it was your first trade,
I would have been more conservative.
Partials or?
No, I would have been more conservative. I would have probably closed right at the 8 a.m. move, like this move right here. I wouldn't have waited for this because I had already started 1845 and we went to 1842. That was 30 pips. I was comfortable with that. If that was my first trade of the day, I would have been fine with 30 pips. But because, like I said, I'd already won 100 pips from the Asian session, I'm like, you know what? Like, I'll leave my stop loss up here. If it moves around and drops down, great, I can take it. If not, like, it's not a big deal. Like, I wasn't too concerned. But because of candle timing, I probably would have closed here if that was my first trade of the day, because it was a new hourly candle and we filled that hourly wick rather quick.
Another quick question, Ted. So with your position at 1845, would your stop loss have been on top of the previous 5-minute?
Yeah. So stop loss here, because once again, as I explained earlier, this was the trade. We had consolidation here, we had a breakdown here, consolidation here, breakdown here. So at that point, because you're trading gold, your stop loss is usually above those 5-minute candles that allow you to continue to push through that trade. So that's the reason why when I took the initial trade over here, I moved my stop loss to over here, because it was above this area here. And then if it drops, my stop loss can go here at this point, or I close at this level here, because you can see the way the market structure is on the smaller time frame, and this can apply to higher time frames. You have a nice clean move all the way through. So a lot of times this is what you're looking for, this initial consolidation, and you're like, okay, this 5-minute candle breaks down. Chances are with gold, we're not returning back into this area here. We may come up close to this area here, but we're not going to return all the way up. And then you saw again, we had consolidation here, and then we had the full break of that candle down to this level here, which corresponded with higher time frames. So if you go to the hour time frame and the 30-minute time frame, you have those same levels, right? You can see how that 30-minute candle filled, and that was your clean traffic. So you're watching 5-minute time frames, and as soon as we break, you have your other higher time frame open, and you can see this candle over here matches up with this area over here essentially. And this candle over here matches up with this over here. So you have essentially a mirroring effect. So when we go back and we look at this particular trade, we can clearly see, if people are trying to figure out how this happened, you could see clearly this mirrors this, this mirrors this, and we have essentially this up, this down. And then, like I always say, we have the alien ship of power at that point, because you have this thing here, this thing here, this thing here, right? So there's your alien ship, right? So if you ever looked on the internet and people always talk about aliens, the alien ship always looks like this, right? So that's how I like to trade. I like to trade with the alien ship, and then it zooms off somewhere, and you're like, oh, bye.
People are going to start to look for alien ship patterns.
Well, I mean, that's essentially what it is, right? You start off, you had this initial area here, you come up to here, and you're like, okay, well, eventually we're going to have to come back down to here again. And that matches up with this zone here. I mean, it's pretty straightforward.
Yeah, man, thanks.
Yeah, I guess this was the only move here for this morning. Your JPY is still struggling there. Pound yen didn't really move at all. And gold was the only thing that here moved, which we look at. Looking at the S&P 500 and found this. Oh, someone sent it.
Hey guys,
Raja, it's me. It's the Australian schoolboy again.
Oh yeah.
Yeah, man. Like I threw up at training today, so but it was pretty tough. I got Sonny Bill on the line as well. He's going to be part of the part of like Wingstone line as well. So
Oh, nice.
yes, I've got all the boys coming on and stuff like that. Especially when Ted speaks like that, that's what we need. Exactly. Like you guys are a good crew, and that's what we like: honesty, loyalty, and the things that the boys are jumping on as well. So Sonny's going to jump on as well, and I'll still have to send you the All Blacks sign jump.
Yeah, it's fine.
Yeah.
Just take your time with it. Yeah.
Yeah, no, it's all good. I just came back from training at the moment, man. So, OG, my guy. All right, man. I'll.
Yes, sir.
Yeah, the S&P 500 is dead today. Not much going on. I did take the trade with gold instead, so that was good.
David, there's a lot of feedback.
My mic not working properly?
Yeah.
Looks like you're in a plane.
That's a new mic.
Using the plane's mic.
Let me disconnect and I'll connect again. Hold on.
Just remembering me the dial-up connection.
Yeah, that's right.
Bishop.
Daddy, if you get a break below 1837, 1838, I can. It's another drop coming for gold. Once we start breaking the previous 5-minute candle.
You guys hear me okay now?
Yep. Yeah.
Yep.
Okay, now it works. Yeah, like I was saying, the S&P 500 is dead today, but I did take the trade with gold with Ted, so that was pretty good. I didn't get 70 pips, but I got about 60.
Where can I follow Ted? You can follow him right here on the live streams. Man, pound yen is just garbage here today.
Yeah.
Let's remove the zone, and just by looking at it, we got this range here, consolidation. It's just not a good pair to trade today. So if someone's trying to trade pound yen, I would say just don't look at it. It's just not clean at all. I mean, I would not look at pound yen at all to trade. What do you think GJ's swing with the daily analysis? Let's take a look here. Oh, we got the 4-hour time frame coming down, closing at 2 RR down over here. Nice. See, instead of closing with 2 RR, this is where people they basically eat their own profits, right? As you're focused on closing 2 RR, I think you should always have plans in place to secure positions as price comes to your take profits here slowly. Because sometimes we can get so we can get so focused on, hey, I want to close at 2 RR, or I want to close at like 3 risk reward. That's all perfect, but as price is moving in profits, as price is coming to your target areas, it's really important to start securing positions as price starts moving. Because obviously it will come to 2 RR, but at the same time, there's a probability it may just tap into that area and then start rejecting. So it's not always important that price will always reach your target. How much would it cost to fly to Australia? Probably in these circumstances, I don't know. It doesn't really matter about the cost, it matters the time. Because if I leave Canada here today on Monday, I'm probably going to get to Australia by Wednesday evening or Thursday. So it's the time spent, while traveling that concerns me the most. All right, let's take a look at this. This is, what do you think about this trade I took? All right, let's see here.
Someone said you can trade on the plane, fam.
Yeah, that's true. So there was
15 hours trading.
I entered this trade with the half my lot size because I had a lower support. I wasn't sure about that, so price came down, took profits. Nice. I think it was a pretty good trade. I would think it was a really good trade. So the pairs we look at, normally we look at 3 pairs. I look at Euro JPY, I look at Pound JPY, and I look at gold. You know, and out of all these 3 pairs, the only pair that had a good move was gold sells. Other than that, everything was just like, it didn't really move as we expected them to move. Let's take a look at this here. This is GJ 15 minute, closed 80% when bullish candle breaks to half the previous bullish candle, okay. 20% runner hit the stop loss at 7 pips. Very nice. Beautiful. Took 1 trade and managed risk in that trade. I think that's excellent. Alright, let's take a look at this chart over here. Entry was over here, closed 50%, closed full position over here. Still good. You know, if you guys manage risk, I think that's very good. If we target minimum 30 pips on gold and set stops on 10 pips, then gold will easily hit the stops like 10 or 20. Then what do we do? It's not about having stops at a predetermined numbers. You know, it's not like you're gonna have a 10 pip stop on gold. A stop loss is supposed to be kept at a like a reasonable level. You know, like if let's say price starts breaking the lows at 1836, you cannot have a 10 pip stop because your 10 pip stop is going to be right over here. So logically thinking, it would make no sense at all to have a 10 pip stop. You know, in this case, you would have a stop of about, you know, 30 pips, 32 pips. But then again, if you're looking for targets, then you're looking for price to continue down lower, probably down over here, like around like 40 pips, 38 pips. You know, so your targets are then proportional to your stop losses too. So you can't have a 10 pip stop when gold is literally, you know, the spread is 4 pips on gold. I mean, let's just use common sense here.
Yeah, I think people are trying to use that magical formula again, where you always do this if this happens, and that's not the case. The reason why I had a stop loss that was in 10 pips in profit was because I had already managed the trade at that point. It doesn't mean that I'm always just going to look for 30 pips or I'm looking for 20 pips. It's what I'm comfortable with based on market structure. And I think people have to get used to that idea that market structure dictates your stop loss and take profit areas, right? It made sense for the take profit area to be at 1837, 1838 because of that was market structure. So when you go back and you look at this trade, you can look and see multiple opportunities for stop loss. Excuse me.
What's this? Anyone who is still looking for a trade on GJ today, just stop. London looks so dead, and I'm guessing the whole of the UK is too. Feels like a bank holiday. Yeah, that's true. You know, there's no point in forcing trades. I mean, if you look at right now, it's just kind of like ranging over here, unless it starts breaking below, let's say 143.70. We got this candle closing about 4 minutes. This 30-minute candle.
Yeah. I think it should be good to continue down now as we're breaking the low. Oops. Jeez.
Yeah, at this point, you would need this 30-minute candle to close bearish to anticipate the next one to continue bearish.
Yep.
Yep. Yes, sir. That's going to be a better move at that point. All right. Let's take a look at this chart over here by nobody.
By nobody? What do you mean?
Oh, the name is nobody.
Oh,
Hey, Raja, this is how I'm currently managing my GJ trade. Kindly advise. All right.
hey, Raja. Roger.
Let's take a look over here. Closed 25% of my trade as price broke the previous high and going to close fully as it closes back in the range, since I'll be viewing it as a fake out. Well, I still think it should continue moving bearish. You know, it's just like it's stuck in this weird consolidation area right over here. And I think once this candle closes, this 30-minute candle, then we're going to have overwhelming confirmations that price is going to continue moving bearish. But we need this to close bearish here. And the next one we can anticipate it to continue the move we were looking for. But the only thing I want to say is that if you've taken 2 trades today, 3 trades today, just call it a day. There's no reason for you to take a 4th trade or even 3rd trade. You know, there's no reason. If you've taken 3, 4 trades and this is the trade that you've been looking for price to continue down, sit out on this trade. You know, do not execute on this trade. It's good to develop good habits. You know, it's good for your discipline. It's good for your psyche. Because I always tell guys, hey, like, listen, it's always better to miss out on trades than to enter a trade and be like, oh, you know what, I'm not sure if it's going to go down or not. So it's always better that way. We had a clean move up on GJ and it didn't mirror it on the way down. Yes, because I guess there's low volume over here and price is just kind of like struggling to go down. You can see it was really choppy over here. So this candle is about to close in 2 minutes. Now 2 things can happen as this candle is coming to a close. Either it can continue dropping with one clean candle moving down, or it can close with a wick and the next candle can continue moving down. Plus also we're in NY Open session here, so we're supposed to get a lot of volume in this session. So we'll see what happens here. Do you like this trade? Yeah, you know what? It's a pretty good trade over here. I mean, the only thing is you need this candle to close bearish, right? You need this candle to close below 143.80, and then you need the next one to kind of break the low and then continue bearish. That's what you want at that point. All right, let's take a look at this chart over here. This is sent in the gulag. This is no trade zone. This is US 500 for price to break below this low, for price to continue down. Yeah, I think it's pretty good. I think the only thing you should be cautious about is this support you have right over here. And then second entry right over here.
I think Dave was talking about the S&P. There was no volume today.
Yeah, that's correct. There's no volume.
How does GJ, EJ are affected by the Japanese bank holiday? See, we already talked about this, right? And I'm going to try to explain it even better now. See, now, once we start using our own brain, you know, and when we start to look at it from a more logical perspective, we need to ask ourselves a question. Is the Japan banks are open at this time? And the answer is going to be no, they're not open at this time. You know, so then you got to ask yourself, okay, if it's a bank holiday in Japan, does that matter at this time? And the answer is going to be no, it doesn't really matter at this time. So it doesn't really matter if the bank has a holiday during a New York session or not, because it's already still closed. Oh yes, what's going on? All right, I'll be right back.
It was summoned by the market.
Summoned by the market. Nice. If anyone's seeing GJ right now, as you see this last 30 minutes, how it closed with the wick to the bottom. Just be careful as we're coming down again, and if we get to break that previous low, as I think we should, to continue down to finally hit 140.200. I'm still on this trade. It's been almost about an hour already.
Yeah, I re-entered.
Yeah, I agree. It's dangerous, but I agree. that we
Yeah,
can-
just be careful. Be aware of that. If we respect that previous wick.
35, right?
Yeah, around 35, right?
Yeah.
Just be aware of that. We might
And we,
go back and stay in that range. But then again, there's still another 30 minutes for the first hour of NY. So I think that volume should continue to push down, and my target is 140-200.
And if we're looking at gold right now, so this is a good opportunity with gold, right? So we did this earlier when we got the drop from here to like from 1845 to 1836. So when we look at this area here, this is what you should be doing when you're back testing or you're trying to learn a new pair or a strategy, is you say to yourself, okay, I know that I want this to be my target based on higher time frames. How am I going to get there? So I have to wait for this area to break. And then as we come through, now it's like, okay, well, where would I have gotten my entry? My entry would have been below here. And then now as it starts to move, I'd say, okay, perfect. Where's my stop loss going to be? My stop loss is above here. And where's my take profit here? So you can see from 1836 to 1827 is basically 90 pips. So my stop loss easily fits that range from 1837 to 1841, which is 40 pips. And now I can let this trade run and I can allow it to bounce around. But then once it starts to break, what I'm looking for is I'm looking for candles similar to, say, after this breakthrough here, this 5-minute candle that's going to break down further. I'm looking to see the next 5-minute candle, in this case, start and do something like this, because then what that means to me is that we're going to continue to drive further down, but now I can move my stop loss again because we have stop loss above here. I have to wait for this candle to close and the new candle to start so that I can move my stop loss at that point again. So if you're looking for this trade, and then what I would do is I'd be watching my 15-minute, my 30-minute time frames, and I can see that we're dropping back into, at this point, the hour zone that we originally tapped a few hours ago, right? So back based on on the Friday candle, we're in this zone on the Friday candle on the hourly, and we should basically be going into 1826, which is like a previous wick from another hourly candle back on the 11th of January. So right at market open, essentially. Okay. Now the thing is, it's like, well, how would I have gotten this entry? Well, you would have had to be watching this idea, and you would have to say to yourself, okay, this 30-minute close, now my new 30-minute candle, what do I anticipate with the new 30-minute candle? And I would have to look at my 30-minute structure, and then I would enter in on the 5-minute candle, knowing that gold moves very fast, and I have an opportunity now to take, an additional trade if I had only taken my first trade and gotten here. Oh. And you would then continue further down through this trade. Now, as this trade continues, you have to be careful because this candle is breaking this consolidation area. So you might find at the end of the 5 minutes, the next 5-minute candle pulls all the way back. So you always have to be ensuring that, okay, at this point, am I comfortable taking, like 40 pip profit with no drawdown? So I'd be saying to myself, okay, yeah, maybe I'm okay. I took 40 pips, it just dipped and I don't have to worry about it. But now if I'm continuing this trade, I'm going to watch this 5-minute candle here, and I can already start to see, okay, this wick is starting to form. Maybe I can start to move my stop loss here because we may find that this candle's not going to push up anymore, but it might just sort of hang around and then just start to continue to drop. But we also know on the 30-minute time frame, looking to the left, we have a candle that looks, the hour time frame, a candle that looks like this. So we know that we're entering that zone. And Raj has put it up on the hour, so that we know we're coming through this zone here on the hourly time frame. So we can anticipate that more than likely we're going to hit this level here, but we could reject anywhere in this area. So we have to be careful. Once we broke through here, at any given point on the smaller time frames, we could pull back up into this area over here. So we have to be careful. But as we break through different levels, we can, okay, perfect. I can take profit here. If we continue down to this area here, I can take profit here. And if I do break down, I can move my stops as well at that point. And we're heading right to 1826, 1827 area. So you have that momentum, and now you can start watching, you know, the higher time frames as we start to push through.
Yeah, I'm okay. 1831 as a profit. We said earlier. Right now I'm only 38.
Yeah, it's also amazing if you keep looking at the 5 minute, you'll see how it comes down with these clean candles to the left and approaches consolidation, reacts to it, retraces, and comes down again. Pretty good market structure to read here.
Yeah, basically it's the same structure as it was a 30-minute candle, 15-minute candle. This is something that you're gonna find every day on gold.
Yeah, and that's the thing. And knowing those little small tips like the 5-minute candle pullbacks, things of that nature, you know that once we break that level, and exactly what I said, that, you know, we could pull all the way back into this area here. So your trade would have been this 5-minute candle. And then you say to yourself, well, Ted, how could I have caught the 5-minute trade? It's like, well, you have to be watching this area here, and you have to time this information with your higher time frames, right? You have to look at your higher time frames, and you have to be able to put, you know, screen 1, screen 2, and you know, maybe screen 3 together and say, okay, what's my overall trend? What's currently happening on the higher time frame? And then my executable time frame, what am I looking for at this point? So I could see how all of them match up together. That's what you're doing. You have to have this idea going. As you get better, you could essentially, you know, not have 3 screens open, because like I know that gold on the higher time frame is bearish, so I'm comfortable looking at sells, but I'll be watching my hour time frame and my 5-minute time frame at that point.
Yeah.
Ooh, looks like pound yen didn't really break down over here.
Yeah. Yeah, you said it. It's better not to touch it though.
Yeah, we talked about it, like if to be careful on the 30-minute, as it wasn't breaking this wick right here. Man, you're always switching on me.
It's a deadly.
No, sorry. No, I was just laughing in the gulag there. Someone is saying, look at Mac's face. He's in drawdown right now on gold. Late sells.
People come up with this shit.
They know you now, man.
Yeah, people get to know you, man.
I'm not even trading gold.
That's funny.
He's a DJ.
Yeah, with pairs like gold with high volatility, the best chance you could get is trading 5 minutes, to be honest, with the confirmation on the higher time frames though.
Because you might miss the move.
Yeah. No, if you wait for gold to give you a close below certain areas, it's gonna be a mess.
Yeah, and that's why trading gold, you need a little bit more advanced structure with I guess price action. And then the question becomes, well, how can I trade gold? It's like, well, you graduate, right? So you work with pairs like UJ or USD CAD, or, you know, pairs that move a little bit slower, so you get comfortable with price action, and then eventually your mind gets stronger so that you say, okay, well, I want to try GJ now. I want to try gold. I want to try US 30. As a new trader, I don't recommend you jumping into trade GJ or US 30 or gold right away. If you have less than 6 months or a year experience trading high volatility pairs, you're not going to have fun, because you're going to get like a 50 pip retracement on gold, and you're going to be like, oh, I got stopped out again. I got this. And it's like, well, you know, if you knew that, you would know that, hey, sometimes as soon as you see a 5-minute candle turning, you need to close. And that's experience talking. But people don't want to accept that, right? They just think that everything is just going to be perfect trading high volatility pairs, and it's not. It's very, very difficult. Catching, 40, 50, 60 pips on gold is very difficult. You can catch it, there's no doubt, but consistently doing it is very, very hard. You get stopped out a lot. You're going to only have maybe a 2 or 3 pip profit trade a lot of the times. And, people that are trading small accounts, you're just going to get frustrated unless you have the mental dexterity to say, hey, this is the long-term game. I'm okay with taking 2, 3 pips a trade on a $100 account because I'm working full time or whatever.
Yeah. So Uncle Ted, what I'll suggest as well, like I play rugby. Like we've got a lot of guys who make a shitload of money through rugby over here. So like they just think they can get into the game and trade as well. And so what do you suggest? Like, what's the best piece of advice I can tell them?
Well, I think the first thing, because you guys are in Australia, you guys should be focusing in on Australian currencies, because that already gives you an advantage because of the fact that you guys actually live in the country, so you have a very good knowledge just from a general economy sense, right? Like same thing like when we started trading back, like when I started trading back like 6-7 years ago, I was looking at USD CAD because I live in Canada and US is very close to me, right? So maybe you guys are going to look at, the Aussie New Zealand dollar, right? Just because you guys are very close. Maybe you're looking at the Aussie Japanese. So there's opportunity there. I wouldn't be jumping into, the Canadian dollar from Australia. Like it seems a little foreign, similar to how I wouldn't jump into the Australian dollar from Canada because it's a bit foreign. Start with that basis that the country that's closest to where you live, or if you live in that country, start with that currency, because you're going to know a lot just from watching the news. And that's what I tell people when they first start trading is watch the news, watch what's going on, current events, then look at the business news and see how your current events in your country relate to how the dollar moves. And then you start to hear major news items, right? You'll be like, in Canada we talk a lot about the oil industry, we talk a lot about the forest, like lumber industry, resources,
maple syrup.
Well, that's not really something that affects the market. But
with us, we're mining as well. So
yeah, exactly. So like Australia is very heavy with with gold, things of that nature, right? So it's putting those ideas together and then formulating a strategy, saying, okay, when now does the Aussie dollar move the most? Where does the highest volume come from? Okay, it comes from the morning session of the the Aussie market. What is it moving on? How's it basis? Like where does it go? And then you expand your knowledge that way, and as you conquer that single currency, then you can start moving to other currencies. Like when we first started, I knew nothing about the UK economy. I knew nothing. Now 5-6 years later, I'm very well versed with the UK economy, because you start to meet people from the UK, they start to talk about what's going on in their country, but more importantly, it's more like the inside information. It's like, what are they doing on a daily basis? Like, what are they seeing? It's like, I know when I live in Canada, what do I see on a daily basis? Okay, I see a lot of houses for sale. I see people losing their jobs. I can report on things that aren't necessarily all the time in the news, because, you talk to people, you have people that work in the industries, and you have people that are, are friends there. So it's similar to with the Australian dollar. It's like, as you get more comfortable, then you'll talk to your buddies in the US, you'll talk to your buddies in the UK, and then that's how you expand your knowledge. It's over the years. You're not going to learn everything in 6 months. You're not going to learn everything in a year. It's over the years you gain this knowledge, and that's where you gain the experience too.
And I think I'm glad you said that to me, Uncle Ted, as well, because like we're a bunch of rugby players as well over here. Like I said to rakeel as well. Like and the things that we just wanna be like free. That's the thing, though. Yeah. So much appreciated, Uncle Ted. Like I'll leave you. Yeah. So. Thank you very much.
Yeah, no problem at all.
Yeah, thank you.
So you started with GBP CAD, Ted, because you were living in Canada?
No, USD CAD.
Oh, USD CAD, because you live in Canada. So now you're living in Golden Land?
Yeah, pretty much. Yeah, we didn't start trading for gold for like 1.5 years, almost 2 years before we started trading gold.
But that's the beauty of price action. Once you understand how price action forms, you can trade basically any pair, to be honest.
Mhm.
Because the same move that you get on gold, you're gonna get it on GJ, just exponential, because it's
Mhm.
gonna be obviously more volume. But it's basically the same structure.
Yeah, it's just a comfort level. And I think that's why I tell people it's easier to trade the smaller or the slower pairs that move a little bit slower. Yeah, it's not as glamorous, but it's like when you first start driving, right? Like, if your parents bought you a Ferrari the first day that you started driving, yeah, it's great to be able to go fast and do things, but there's a level that you're probably going to have issues with in terms of your capability of controlling the car. Like, you graduate into things, right? Like, you start off with your Honda Civic, you get used to driving on the road, you get used to, accelerating, braking, and then eventually, you modify it, you go a little bit faster, and then you build out. It's the same thing with trading. You want to, just take your time and build yourself into a comfort level and be like, okay, I'm ready to start tackling GJ because I've seen what's happened on these other pairs. I can now try and map this information over. And I think a lot of people are so quick to jump over to these other pairs, and you don't have a solid foundation of price action, or you're not getting the proper instructions on a daily basis, and it just sets you up for failure. Like, I mean, I think this stream is good. A lot of people trade GJ because Rakeel is a master at it, so he can teach you everything you need to know specifically about that pair, and at the same time teach you the price action to go along with it. But somebody who's not following along every day, it gets quite difficult because there's always all these little nuances that you need to know about. It's the same thing when we talk about gold. There's so many nuances. So you need to just be able to come in every day and learn that, or rewatch like the stream, like the recorded versions, and take notes, because every day is a class. Like, every day is, we're talking about something, or we're watching what a particular pair does, and you need to know those characteristics, and you need to be able to apply them, say, tomorrow. Like, we need to know what's going to happen with gold tomorrow. You have to anticipate that based on what happened today. And it's like, well, how do we do that? We have history of the last 3 years on the live stream here that we've provided that information.
Wow, everyone's trying to absorb all the knowledge, man.
That's all right.
No, thank you, Ted. Much
no
appreciated, dude.
Yeah, no, I mean, like I said, I don't consider FX competition. I think I did a podcast the other day with chart addicts, and we were talking about that. It's like, you know what? At the end of the day, we have a community from all different traders, all different people that are educating, different brokers. It's a community. Like, you have to look at it as a single organism that allows everybody to grow together. You want to be able to keep doing that and sharing information, because that's how we all improve and get better.
The way I saw it, it's more like a rugby team as well. Like, you care as well. Like, even with Rakeel as well. Like he's a G. Like, he's my day one.
Yeah.
As well. Yeah. So like, so you have to be loyal to that as well. So
well, it's like I talked about a lot of I teach some NFL players, and I taught a couple of CFL players, like football players, like not and it's like they're on teams, they're pro athletes similar to you guys and doing rugby. There's a discipline there. Like, you understand what it takes to get to a high level in terms of.
And it's disgusting though. I threw up today, like.
Yeah. But the thing is, like, the average person doesn't understand the level of achievement that you guys hit because of the discipline that you're in. And then when you start trading, it's even, it's the same process, because you're used to going to the gym twice a day or doing twice a day workouts, and it's like, this is the same discipline. And then you realize like how fast you absorb the information, because your brain and your body have just been trained to perform at such a high level. And that's what FX is every day.
And things, it's called bring on herd. That's what we call them. So bring on herd. So when it hurts you, when you're spewing, that's when you have to go even harder. And that's, I think, what FX is like as well. Yeah. No. Thank you, Ted. Like, fuck, mate, you just made my day tonight. Like, even speaking to you like that, like, I really appreciate it.
Yeah, I talked about that on the podcast too. Like, people come up to me and it's like they're so afraid to talk to me, and I'm like, I don't know why. I see people all the time, and they're like, they're in awe, and I'm like, I'm just a regular guy. Like, I don't know. Like,
nah, man, I feel comfortable as well. Like, even like with rakeel, like, he's very transparent. Like, he just always like responds to my messages real quickly as well. Things you're gonna get to know me, like, especially like with the All Blacks, with the boys and stuff like that.
Yeah.
And I'll be glad to like everything's gonna come into the open anyway. So,
well, I've always looked at it as this. It's like, you know, you should never. If you're going to have some sort of influence on social media, you should always try and be accessible. I know a lot of times people are like, well, Ted, you don't answer my DM. It's like, the reason why I won't answer a specific DM is because the answer is on my Instagram page. And I'll do that. But a lot of times, you know, people message me daily. Like, I have like 60, 70 conversations a day with people. And it's not like, hey, what's going on in charts? It's like, people are asking me like what I'm having for breakfast, or like, what did I do today? It's like, I think there's, with social media, and I've gotten used to this now, is people believe that we're like super close friends. Like, you know, you can call me up and be like, hey, do you want to watch a scary movie tonight with me or something like that? Like, there's a level of like comfort or, you know, accessibility. And sometimes I take a step back and it's like, man, it's like, this guy thinks I have nothing to do all day. He's just talking to me nonstop. And it's like, I have to tell them at one point, I'm like, guys, I got like stuff to do.
Man, dude, like, you and rakeel, like, you don't even realize how much you guys have saved me so much through my life as well. Like, I didn't have to put my body on the line as much as well, because I've been following you guys. Weeks don't lie. So, man, playing rugby, man, is such a painful sport. It's such a brutal sport. Yeah, it's worse than NFL. Trust me.
Oh yeah, no doubt, because you've no equipment and you're going just bone on bone essentially.
Yeah, exactly. and the thing is that once I whistle no lie, and I still got my brain.
Yeah.
Fortunately, and all the boys are like, this is what you're doing. It's like, this is what you need to do as well. Like I said, like with rakeel, he's such a good teacher and he's so gentle, and that's what the boys like about him as well. So
yeah. No, that's good. I mean, and you know what? I think that's important, and I like these kind of conversations because it brings a sense of, you know, realness to what we do, right? Because it's not just myself talking, or Kerwin or Mac, or, you know, sort of the, you know, I always call them.
Man, but the things I wish I could take your brain. I just wish I could just take your brain. Like, seriously, dude.
There's not much going on in there, trust me.
Like, yeah, but the thing is, man, that, trust me, like, all the boys love the Wicks don't lie.
I think a lot of the times when people talk about sort of trading, and, you know, they always ask me for my brain, I sort of look at it, I always laugh, because I always broke down trading in a very basic, simplistic manner, because I was never the smartest kid in the class, or I was never like the best athlete. I just knew that if I put in the work, I would get to where I needed to be. And that's sort of the same approach I did with trading, is like, if you can figure out how to make trading your own, you know, whether it's, you know, understanding the charts the way that only you understand them, or, you know, understanding nuances the way that you're comfortable with, that's where you're going to have the most ultimate success. I think a lot of people try and package an idea and say, okay, this is how I have to do it because I see everybody else. I've never been like that. I've always said, trading is an art form. You're an artist using a canvas. You need to figure out what you're most comfortable with, because that allows you to do the same thing every single day. And it allows you to be successful because you're comfortable with that, and don't let people tell you otherwise.
True.
Like, if it's working and it doesn't, and it's not breaking, you know, don't try and change or reinvent the wheel. Do what you're comfortable with. And if you can't do that, there's a problem with what's surrounding you, whether you're on social media too much, or you have influences from your friends. It's, you need to really have to just focus on doing it your way and making success, or defining your own success at that point. And I think once you do that, you'll see the ultimate returns on your education or whatever you're doing at that point.
Yeah. No, definitely. No. Thank you so much for that, for the Uncle Ted. Like seriously, I'm in awe as well. Like even with rakeel as well. Like no, I should probably keep quiet as well because he gets a bit upset if I talk too much over the line as well, man. But yeah, man. Like thank you so much, Uncle Ted. Like really appreciate it. Like really appreciate it.
Sounds good.
Yeah. No, thank you.
Can you just press the button so make sure that GJ breaks previous low, please?
All right, Sacha, hold on there. Make sure you got the.
Please.
Let's make the call.
Yeah, make the call, please.
We're patching you through, Raja.
Thank you. No, I think this is going to be this next hour will be the hour if it's going to fall or not.
Yeah.
Because you can see this 30-minute candle came down, broke below support, didn't close below, moved back in the range. This one now is closing below support. And if you look on the 1 hour time frame candle is also creating this bearish candle. Looking at the 4 hour is also about to close. Clean candle here to the left hand side. Looking at the daily as well, we got this clean candle moving up, so we can have the same move coming down.
Come on. Here we go.
Yeah, so I think it's going to be a pretty good target at 140, 200 here.
Here we go. Yeah, I got my first target at 250 and final one at 200.
Just beware that we're gonna have the need for our open.
Exactly. I was about to say that that's the only thing that I don't like about taking sells on GJ right now. These last 3 minutes of this 4 hour candle, you may get a nice push, but nice drop, but it's dangerous.
It has to create also a downward in the 4 hours. So
see,
current stop jinxing it.
As long as the next candle doesn't close back in the range, you're going to be good for price to come down because there's been no volume here at all. Price has just been ranging through pre-New York. Like after London Open, it's just been ranging through pre-New York, New York Open, range. So then the next volume is going to be in the next hour by New York Stock Exchange Open and moving into London close. The only thing is it shouldn't break above, let's say, 140, 450.
Yeah, the only thing on GJ right now is basically this heavy support, and you have rejections from there, so everything is again closing above this area right there, 140, 400. So to me it's a no taking sales right now. I would like to see a retracement toward 140, 600 and rejection from there. Other than that, this is not giving me the confidence to take any trade today on GJ.
Look at this candle closing below support. Really, if I hadn't taken the trade, this would be a pretty good opportunity for price to continue down.
This was a really valuable day. I took a lot home here, and I'm really grateful to be here.
Oh, thanks, James.
How much did you take home? I'm playing.
No.
5%.
About to charge a fee right now.
Yeah, it was a cut. My calls, my cut.
Yeah, boys and girls, I don't like GG.
I'm gonna wait for a break.
Yeah.
Kerbin, I think we might go to 500, but not 600. I think 600 is too high for the 4 hour new wick.
Yeah, but that's why. That's the top of the range pre-New York. So basically, I would like to see what's gonna happen around the 600 level. Above 600, you may take a risk on the table and try to cover the gap that we have from yesterday. But other than that, man, I will wait till tomorrow.
You don't think we might go to this area? And then maybe
to the 200?
No, 450, 500.
Yeah, I mean for GJ that's really easy to go there.
Yeah.
With this new 4 hour candle.
Right, like Carlos said, you could retest that area, but I don't think we could go above 600.
Yeah.
So
Yeah, I think 500 for the new 4-hour wick, and then we might go and fill the range to 140.20.
yeah, just be manage according to your risk.
Problem is we don't have any volume basically on GVP. If we have any volume, this 4-hour candle should be closing around 140, 250 easily. But we don't have that volume to break that support. That's the problem. That's the problem. It's basically just dissing you to take sells.
Yeah.
Yeah, especially if you look at H1. If you look at H1, I mean, this is a perfect like break the zone, retest, create resistance. Just like it's super clean on H1.
You mean a break and retest?
Mm-hmm.
Yeah, broke 46, went down, retest, now lower. I think we're gonna have another retest of the 46.50 area, and then we're gonna break.
And even that H1 resistance form with this engulfing bearish. I mean, a lot of stuff.
Yeah, a lot of stuff with no volume.
yeah, I know. It's terrible.
That's right.
Terrible.
A lot of stuff with no volume.
Yeah.
Exactly.
Yeah, it should start stopping around this area.
But that's the thing. I don't see 450 as a heavy resistance for the new hour. I will look even more to the upside. Probably 600.
Well, 500 is pretty strong. If you look
Yeah,
to
but
the left.
600 curving would be above the previous 4-hour high.
Yeah, that's right. You want to see a break of the previous 4-hour, because if this 4-hour candle didn't break toward 140, 200, 250, let's say, you want to see that GBP is going to start gaining some sort of strength with London close. So this new 4-hour candle is going to try to break that 600 level.
Well, it looks like Rakeel's about to head out.
Okay. Oh, yeah.
With his jacket,
my analysis on point. I'm gonna head out too, guys.
Man's not hot. What do you mean?
Man's not hot.
Alright, guys, I'm gonna head out.
Okay, Raccoon.
Looks like it.
Raccoon, come on.
Take care, everybody.
Yeah, man.
Listen,
if anybody on GJ sells, be careful, please. Be careful.
Yes, yeah, there are
I
no
don't want
sell
you to get
confirmations
caught
here.
on this